Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Once again, happy Friday, everybody. Hope you're doing fantastic. Well, I'm part of my coaching group here today. We're in Arizona, so that's where the background is a little bit different than the Colorado landscape. But we get together every quarter, and so here I am in Arizona. But I wanted to get with you and let you know what happened with interest rates here this week. We did see interest rates finish the week a little bit worse than where they ended last week. We saw a lot of economic data that was introduced into the market, and we also had the Fed meeting. Today, we did see the employment report come out. That showed that there were about 211,000 jobs added to the economy. Expectations were for about 158,000, so a little bit stronger than expected. However, over the previous 2 months, there were revisions, and those revisions were a net 6,000 down to the previous last 2 months numbers. Last month was a real big miss. So even though this month was a little bit higher than expected, the market is not reacting very significantly to that. That's because of, again, those downward revisions. Also, the unemployment rate went from 4.5 down to 4.4%. So that's one of the lowest unemployment rates that we've seen since the mid-2000s. And that normally would be bad for interest rates, but it's not really translating because it looks like a lot of these jobs here that are being added to the economy are not real high-paying jobs, because average hourly earnings only increased 0.3%, and actually the year-over-year number actually went down a little bit because the previous month dropped off. It's kind of a rolling average, so it's showing that there is maybe a little bit less momentum here on the wage front. That keeps inflation low. We also did see the labor force participation rate that came in at about 62.9%. So again, just not as many people out there looking for jobs. So that's why the unemployment rate is actually a little bit lower. We also did see the Fed meeting happen this week. No big surprises there. There was no press conference afterwards. They did release a statement. Again, no surprises. Over the last month or so, we have seen some economic data that shows that maybe inflation is curbing a little bit, and that the economy is cooling a little bit, but the Federal Reserve did say that they believe that that is temporary. So as of right now, most experts are still predicting maybe another rate hike in June and or September. There was no statement as if they would start curbing some of the reinvestment of mortgage-backed securities into the Fed's balance sheet, so that would be typically bad for interest rates, and that didn't happen. So right now, rates are a little bit worse than where they were last week, but they're kind of just holding in there. Stock market is still close to those all-time highs, so relatively speaking, we're holding in. We have broken beneath some levels of support here, so hopefully we'll hold. But now that we have some of this data behind us, maybe we might see a little bit of a rally that might happen to the market, but we'll keep you informed and we'll let you know what's going on. Thanks for joining me with Java with Jared. Even though I am here at this coaching group, I'm going to be flying back here, so if you have any questions, please feel free to give us a call. My team is there, and we are able to help you out there. So again, thanks for joining me with Java with Jared, and we will talk to you soon. Hope you have a wonderful weekend, and if you need anything, just give us a call. Bye-bye.